The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. 877-927-6648 is the number to call. Technical Friday, so let's get into the nitty-gritties. E-mini is down 70 cents. It's down 1 actually at 26.63. Had a really good open. I went to a new recovery high, leg B in the Chapman Wave Daily. This is fascinating. When I said to subscribers to my opening call this morning when I sent this out, also posted it to the den, there's a rising wedge-shaped formation here. I put in this trend line and I said there should be resistance in the 2679-ish area, and lo and behold, 2680 was the high, and then it pulls back. I've only got this as a leg C, a peak C. There's no other way I can count it, and it is under, look right here, let me move this away. It's under the 2679, most recent high significance back on around the 27th, 28th of March. So this is going to be very important because within the context of what we're looking at right here, it looks like this is a partial failure. Now, when I discussed this and I mentioned to my subscribers, in fact, I said in the heading to my Traders Corner, that's the final news, final page that goes out every day, about 8:35. Start sending charts of the Dow and all the different stocks that we have, or ETFs, or that we're looking to buy or short, or whatever it is, starting at about 6:30, 7 o'clock, and then at 8:35 is the final chart, and that is the Traders Corner. And usually I have a paragraph that sums up just precisely what we're looking at. You don't have to read all that other stuff, and a lot of people like to read the other stuff because they are becoming technicians and they're looking at these different waveforms and the Chapman wave, etc. So they want to use it as a study. For me, this is a course. It isn't just a newsletter. It is a course. And what I said was, of course, this is a different course. Of course, with no bad news, the market feels free to push higher, and it did, but needs new gray leg Bs in the Dow and the S&P. All the stocks mentioned in this sector yesterday did really nicely. I'm still interested, and I mentioned a particular stock that we're interested in, which we bought this morning. It's now above the price we paid for. Hey, days young, anything can happen. And then that kind of sums up what I'm looking at. Now, within the context of all the different bullet points, the 15, well, much more than 15, because you now use 1A, 1B, 2A, 2B, if they are of like, and I even use that for the GDX, the gold, the bullet point that I have, because I mix it in with the dollar. We are still along the dollar. Seems to have held okay. It hasn't broken anywhere down, it hasn't broken anywhere up, it's just stuck in a range. Okay, now let's get to the nitty-gritties. What I wanted to show you is this. Now I'm going to run the numbers. The S&P now is down, the E-mini is down 4. The Dow, and then I'll do all the technical work as we move along. The Dow has gone to a leg B, a gray leg B, took a huge effort, took the stochastic to 69%, not 80%, but 69%. Took the MACD a nice cross to the positive side, not usually positive, but the histogram is good. And nicely over the 9-period moving average, just broke above that dash trend line resistance, went back under it. I'll talk about that in a minute. But just give you parameters. The parameters are real clear. There needs to be a close in the 24,650s or higher in the next couple of days to say, hey, this isn't just a chop, chop, chop sideways period, but this is a choppy to upside period with news pulling it back. But the cork in water says it wants to float to the top, and that means that there's residual strength that needs to be unleashed. And every time it's unleashed, it needs to go with the technicals. Well, the technicals have been stronger than the price. I don't usually like that. That's called wheel slipping as far as I'm concerned. In the next 2 days, key support is in the 24,290s to 24,260s. S&P, there we go. S&P down 3, at 26.60. It made a nice leg beat to the upside. Technicals were improving, not great, but they are improving. But this is such a lot of work for a month. It hasn't been able to break to that ugly candle of March the 20, what was that? March the 22nd, that really ugly candle. Gaps down, has a high of 26.95, has a low of 26.41, closes near the low. That, you want to see that gap filled, and filled decisively. It's going to take a little bit to do that. QQQs tried to rally. They were leading a little bit earlier today. Now they're down 62 cents. They're 161.60. I said to subscribers, the 163s shows a lot of resistance. Well, we went into the 163s. Banky just crossed slightly positive. Stochastics okay. This is just okay action. We remain short from a point off the all-time high, and we're going to remain short at least as long as I can try to stay short. We have taken some nice gains, but kept the core of the position. The weekly chart says, hey, a lot of work needs to be done. IWM, that's going to be fascinating. Remember, IWM was leading a little bit the other day. It's still leading to a certain extent. It's down 0.28%, a little bit better percentage than the Dow. But within the context of what we're looking at here, 154.33, it needs, and I said this the other day, it needs to get to the 150.60s and kind of hold there for about 2 or 3 sessions. Then I'm going to say, hey, IWM is actually leading the way up. Let me get rid of this right here, the 120-minute chart. See that the monthly is still holding pretty well. And you'll see that the weekly chart has improved, but got hit in that resistance line right there. So we'll watch this one closely. This is the Russell 2000. Okay, nitty-gritties. Gold. Gold was up a little bit, got smashed over the last couple of days. Now it's up 6. It hit that trend line that I typed in as Chapman wave, inside track. Resistance is just right there now. It's up 6 at 113.48. Now, this is going to be really interesting because the weekly chart, the technicals are still kind of weak, but the price is nicely above the 9-period moving average. So what I'm going to say is that within the context of the markets, gold is now showing itself to be a very important asset in terms of looking at the news-related media coverage of anything that's said. Meaning anything that's said from the White House. And now it's in play. It looked like it wasn't in play before. And even if it's single legs to the upside, it's making higher highs and higher lows. Don't want to change my position yet. If you look at silver, my contention is that when silver really gets going to the upside, kind of breaks out into the 17s and holds there, you're going to see gold really fly, and you're going to see the gold stocks. At this point, chop, 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 sideways action. Let's go to high-grade copper. High-grade copper looked good, that looked bad, and it looked good. Looked good the other day, made a peak D, and now it's pulled back quite sharply. It's a 3.06. Better hold 3, otherwise it goes quite a bit lower. Holding okay right now. Crude oil has been on a tear lately. Right now it is up 50 cents at 67.57. I'm calling this a leg F, but there is a real good chance that I might have to say this is an F/B. There's nothing to do right now. If you're long, you hold long. If you're short, I wouldn't be short. I've been saying that for a while. I don't think crude oil is a place to be short. I want to quickly go to the TLT, and this is going to be fascinating. Look, the TLT is having a decent bar, but it's pulled back quite a bit, but it's in a range, and that's what I think. Yields are stuck in a bit of a range right now. I'll be back. Basil Chapman. Dow's down 67, S&P's down 3. We'll be right back after these important breaks.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So let me just talk about this purely technically. This is what I show my subscribers every day. The Dow 120-minute chart. Let me just get this over here. There it is. So 120-minute chart. You will see that I've drawn in a big U pattern, cup formation. Got the rising wedge, got the MACD quite good, got the stochastic quite good. Needs to hold over the 80% line. That would be very good action. However, what I'd done is in the Chapman Wave 5, I had mentioned that there's a real good chance that we're in leg 5 right now, and that this is leg C, peak C, a little gray peak C, and that there should be a leg D to the upside. And what I had done, as I do every day, I said, if at 11:10, I usually make a time. Most of the time it's 10 minutes past 11 Eastern time, but it could change depending on conditions. I said if there is a plus 60s or more with the banks rallying, it could set the stage for a strong close. A minus 30s or more stalls the rally under the key resistance levels. The near-term bias remains up for now. That's the near-term, meaning the 120-minute chart. I'm expecting to go higher. As the magnet of the 200-period exponential moving average of 24,617 is becoming stronger, and the key moving averages are rallying at this stage. All right, let's move this away and see what happened. So this is what I do every day for my subscribers. We went to a peak C, pulled back a little bit yesterday at the close, ran up today to a high of 24,646 above, just above the 200, the orange 200-period exponential moving average. I never really had time for this. My thinking was there's a particular pattern that we look at. If anybody knows my CD introducing the Chapman Wave methodology, you'll know that in the overlapping wave, the rule is that when you've got, say, a left side peak C that starts to pull back, holds the key support level, and then within that you have another series of 3 peaks under that previous high. When it takes out both the left side high that's just been made and the former high, you've got an overlapping wave. Think of it as confluence to a certain extent. You've got 2 streams of action coming together. The rule of thumb is that it goes to a D or maybe even E, but usually it's a D, and then the D pulls back to test the breakout. In this case, 24,622. Where are we right now? 20,422. What happened is it went to 24,646, had a very sharp plunge under the 9-period exponential moving average. And I always talk about fighting patterns. Look at this. You see the big arch that was made going to a Chapman wave 5 at a peak C minus, then Chapman, and then a brand new 5 to the downside. Big rally goes to an X, which restarts the down move to a 5, comes back to a 5 down. This is the most number of 5s I've seen that have been working really well in the methodology that we use for quite a while now. And there's 1, 2, 3, 4, 5, 6 in just the last since about the mid-March in the 120-minute chart. Now look what's happened. It goes to a peak D and it pulls back. Now you've got this cup formation fighting with an arch formation. Okay? Now that's where it stands right now. Holding above the 9-period moving average shows there's still residual strength. MACD is still holding positive residual strength. Stochastic above 80% at 80.12 says, gotta watch this real closely. Not only that, we have a peak D, overlapping wave peak D, pull back. You see these little green lines here in the Chapman wave methodology? These are automated. I don't use it very often. I like to just have it there if I even remember to look at it, because I use so many other techniques that work nicely. But in this case, that was the resistance. What's the resistance? 24,635, and here's 24,686, and it went right in between there and it's pulled back. So this is still going to be very strong resistance. Okay, I want to do this as Chapman wave methodology. For those of you who use the Chapman wave and do it in intense fashion like I do, we've culminated a leg D. If there's no new high bar in this 120-minute bar, that's going to be a peak D. So far, it hasn't broke down significantly. It did break down sharply. It's come back quite nicely. I think as long as there isn't bad news that really permeates the market in such a way that it impacts so many areas that they all come back down, so far, this is just saying the buy mode should continue, at least in the 120-minute chart. Let me show you the daily. Actually, let me just have a look at the back end to see if there was any indications of. No. Okay. So now what I want you to do is this. I want you to say that you've still got to you've got to understand which areas are quite significant in terms of the rotational aspect. Look, the IBB pulled back a little bit here, but it's shown that it's holding okay. It's not great, but it's holding okay. This is the NASDAQ Biotech ETF. So it held the 9-period moving average on this pullback. This is only a leg A on the daily chart, a peak A if there's no new high today, a recovery high that is. The weekly chart is still very weak, and the monthly chart says, hey, it's had a very nice full buy mode to a peak E in the short term. Remember, I said this is a really good example of an unusual chart. Very seldom do you get in the monthlies a peak D and then a whole brand new extended buy mode that takes 2 years, and you make an E or a D way below the all-time high of 133. This was under 120. So it's very unusual action. So it says this is still a rotational aspect, and that the biotechs have mixed performance within it. That's really what it's saying. Now this is very interesting. If you look at the semiconductors, and I've considered them the lead indicator for me at this particular point, down 48 cents at 104.38. We do have a long position from the 102s. Been a very nice gain. Actually, we took profits, some profits, in our 3 times long, the SMHs. Let's just get that out of the way for disclosure. What's really important is this leg A, with the MACD just trying to cross positive for the very first time. It's up 0.01 in the histogram, the 0% line. That's a good sign. Usually it doesn't go to a plus and just go there for 1 bar and then break down. Usually it can go for 1 or 2 bars. I think we've got a couple more days. We got into next week, I think, to try to go a little higher in the semis. And then I think it's going to turn around. It's going to break down for a right shoulder failure pattern or an H pattern in the weekly chart. That's my guess. So at this particular point, the monthly chart is still very strong, held the 9-period moving average. MACD is good, stochastics at 85%, pulling back, but still very good. So I'm treating this as a counter trend rally. Meantime, back at the ranch, you will see the stochastics only at 38%. The on-balance volume made a low right there. People have asked me, will I talk a little more about the on-balance volume? Yes. On-balance volume on the way up. A day before, I love this about the on-balance volume. It can give you some really good clues if you know how to use it. Often a day before, within a day, it can give you that reversal excess, the turnaround. So a day before the recovery high, the all-time high of 114.55, on-balance volume turns around. And right here at the exact low, it turns to the upside. But it's stalling right now. I'll be back. We'll talk a little technical, and we've got questions coming in. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Dow's now down 39, S&P's about unchanged. This is such a fascinating market. There is an underlying sense of buying demand that I can see, and at the same time, there's really quick exits. It's as if no one wants to hang around to see what's going to happen next. So this makes it very difficult in terms of getting positions that you think are going to be more intermediate term. We're experimenting with 1 or 2 or 3 stocks that we think are looking good for the more intermediate term, trying to get a position here, just get a feeler for if they're going to work. I think that some might work, some won't work, but I'm not afraid not to do it. Why? Because if you are successful, and let's just say you get a stock in a sector that's been under tremendous distribution for a long time, all of a sudden they're starting to see some increase in buying pressure. What will happen is if it could survive the next big fallout in the market by pulling back, but hopefully pulling back from a higher level from when you got in, and then saying, hey, I'm one of the next leaders coming up. And that's what I'm trying to do for our portfolio for my subscribers to the opening call. I don't know if it'll work. We're just trying our best. It's one of the techniques we want to use. So now let's go question I had about the IYT. The IYT is the transportation index. It's actually up nicely. It's up $1.20. No, it's up $1 at 187.25, but it's still stuck in this range. And until you can see, I like this soft W pattern in the stochastic and the daily chart, a nice turnaround attempt in the weekly chart. MACD is still very poor, but the MACD in the daily chart, that's the weekly chart, the daily chart histogram is just starting to go positive. So if the, and let me see where the XAL is, because that crude oil has been running strongly. XAL at this point, yep, very poor. It's down 49 cents at 113.88. Let's go to CSX. I don't have a rail. There must be a rail. The Dow Jones Rail Index. I bet if I look for it, I'll find it. But in the meantime, that CSX is pulling back just 10 cents. It's at 56.10. It's having a high-level consolidation. Monthly looks good. So the rails are actually doing quite nicely. Is YY, is that a trucker, YY Inc.? Wasn't it something else once upon a time? Or is that a Chinese company? It's Y. Allegheny? Allegheny Corporation Transportation. Yeah, that's pulling back a little bit. This is, yeah, so there's a mixed picture between some of the rails and the airlines, and the weak airlines and the weak, at least I'm looking at a transportation. I think this is trucking, Allegheny Corp. I might be wrong, but I think that's the category. All right, next question is, so CH, oh, I love this. I haven't looked at this for so long. CHRW. This is CR, excuse me. This is CR, I know by the symbol, CR, oh, that's right, CH Robinson, Worldwide Inc. They're in travel or something. Anyway, very nice looking chart. I'm going to make a note of this just to keep it in mind. I'm not sure I would buy it right now. CHRW. Just because I haven't looked at it for a long time. Yes, doing very nicely. It's at 94. If you aren't in it and you actually like this sector, trading at 94.64 down 70 cents, I would say you could nibble at this. Treat it as a nibble, because it's an experiment in seeing whether or not you've got, look, an A, B, C, D, E, F. And that could change. And if it breaks to in the 97s at any point, that's really good action. So this is good. This is a nice looking chart. Just keep that in mind. Echo is a question I had here. Echo. Anybody used to listen to the Goon Show, the English show, the Goon Show? You remember Echo. So this is, excuse me, a little sneeze there, huh? All right, this is Echo, which is trading at 28.68, down 18 cents. I thought I did the analysis on this the other day. Okay, let me just quickly do this daily chart. Oh, I remember it was near a break, or it was at the end of the day. I never got to it. So this is an A, B, C, and it went to a D. I remember now. And it was making kind of a cup formation, and this very long-legged doji said, be careful, there's a little more downside, but if it does break to the upside and get to the 29s, that's really good action. So I'm going to keep the same thing. It's holding well, weekly chart is improving, and I would say it's that monthly chart, that single leg A up, that's just taking its time to digest the gains. I would say that if, so someone said they're long from 28, and it's at 28.65, that's fine. But if you're in at 28, watch the low bar of yesterday, which was 27.35. If it closes under that, be prepared that this thing could test the 26s. But so far, it's acting very nicely. And the fact that it's just down 20 cents on a day like this, shaky day, says it's got buying pressure, and that's really what you want to see. That's Echo. Next question I had, if I can just find it here. Oh, there it is. So that was transports. Yeah, Mike, thank you for all that information. I do appreciate it in terms of looking at the different sectors and what's been holding up well and what's not. I do appreciate that, and I'll be looking at it closely over the weekend. I want to look at this next. Bob wants to know, is this a sell signal on Bank of America, XLF, WFC, JP Morgan, Citi, etc.? In other words, what is going on? Well, at $29.93, Bank of America is down 72 cents. I'd say to subscribers, we're going to be buying the XLF. We were out of our Bank of America stock. We were going to buy the XLF while waiting for a much better price and a come down in Bank of America. I need to just check to see if we were stopped out. I had a fairly tight stop, and it was more, once this goes into the experimental, look, when it was up there this morning, it was looking great. The MACD was improving. The stochastic was good at 52%. Not great, but was good. On balance, volume was in leg A, B, C, D, E. So that was okay. We're in 27. We just got stopped out by 1 penny. I don't mind that. We're in 27.88. I put 27.37, a 50-cent stop, about less than 2% on a position. And reason is, it's that part of the experimental sessions that we're having right now, because if the XLF continued, whatever it was with the banks, if they continue to move higher from the early morning announcements and good reception they received, look what would have happened. You could have closed the day, not the high of the day was near the open at 28.24, but if it closed anywhere in the 29.30s, you can't get a better entrance into a position if it's now making the U-shaped pattern in a very sharp move to the upside, very strong leg B, because that would say that there was a very good chance we would fill that gap, the gap between 28.45 on the 22nd of March and the gap down from the 21st of March with a low of 28.62. So that, 20 cents, just less than 20 cents, that gap, if it gets filled, that weekly starts to improve a lot. I wanted to be there. I was prepared to risk 2%. Why? Because my thinking is that if the price we got it at, if it had to break and close above the low that was made on the 21st of 28.62, if it closed above that, there's a real good chance it would make a U-shaped pattern and go back to at least the 29.81 high of the 12th peak E in March. And that would be very, very nice action. That's more. So 28, that's 1.5. That's 5-6% you're moving to. I was prepared to take that chance, and we're out now. That makes it a little difficult. I don't want to keep going in and out of the bank stock. I think I'm going to step aside bank stocks, at least for now. Think it over the weekend and see what we're going to do from next week. I'll be back. Basil Chapman.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I got this sent to me. Let's see, this is not the one. It's one that just came. Yeah, I'm not sure if this was sent by someone or whether I shouldn't open it because it's, but it says Fed is behind but still screwing up. And really, it's a very interesting article. And it's about April the 13th, 2018. Make me emperor for a day, and I would compel the FOMC to outsource interest rate policy to the bond market. Why should we pay 12 experts, most with expensive Ivy League PhD degrees, to do what the bond market can do far more efficiently and cheaply? This week's chart compares the 2-year T-note yield to the stated Fed funds target rate. The FOMC has actually said the target rate is 1.5% to 1.75%, so I'm splitting the difference by calling it 1.625%. What this chart shows is the 2 interest rates, anyway, it goes on to say that the bond market, the 2-year T-note yield is what is really what you should focus on, and that it's telling the Fed what to do. And whenever they don't listen, the Fed tends to screw up. And I'm going to read it in greater detail because he gives some cogent, I just glanced at it, but he seems to give some cogent points. Yeah, I'm going to read it during the weekend and give you an assessment of what I'm figuring out there. Because this is, yeah, the Fed. Yeah, I think the Fed was wrong for a long time. The Fed could have started raising rates quite some time ago, very easily, just a quarter of a point here and a quarter of a point there. And that's if they felt that the demand was strong enough. So maybe that's it. Maybe they see something we don't see, and they see that, in fact, there's internal weakness. They're looking maybe certain parts of the housing market. I'm not sure, but whatever it is, the TLT and my triple yield chart, let me just go there for a moment, is saying that within the context of yields, my contention is always that a lot of the time, a majority of the time, when markets start to really turn down sharply, that's where you see money flows from the insecurity of stocks to the security, so-called security of bonds, because the yields, because bonds start to rally and you get capital appreciation, and the yields are kind of steady. They come down a little bit, but it's kind of thought of as, I think, as a safety factor. Now, what's really interesting is if you can see over the past 4 weeks, look, if I go to the 30-year, I draw a line right here, we're just a little under the median point of the past 5 weeks, 7 weeks. If you look at the 10-year, we're well inside the halfway point. And if you look at the 5-year, we're actually at this particular point, we're close to the highs, except for that one leg E, peak E, that was made in the Cyan 5-year FVX, 5-year T-note yield. that just spiked up. But otherwise, look, we're into this area right here. You see this cluster formation where the yields are contracting to the point, the price of the yields is contracting where they are so close together. Look at this. Look what happened here. Look what happened right. Yeah, can I find it? I'll find it. Right over. So I hope I'm not getting you giddy, but it'll come up. It should be here. I used to have these all notated. Here we go. Right here. Look. That's it. So right there, look at that cluster of the yields. They were right on top of one another. There was very little disparity between the 30, the 10, and the 5. Look what's happening here. We're getting closer. There isn't the same sort of thing as you saw, but the distance, the difference, the differential between the 30, the 10, and the 5 is closer than it's been in a long time. I still contend that it's probably going to be a sudden spike in yields that really scares the market more than most of anything else, that has more sustainability. That's what I should have said, rather than just a tweet that gets everybody nervous. All right, enough with that. I want you to go back. Oh, yeah, the peak E and the 10-minute E-mini right there, just before 10 o'clock. And that was, I believe it was a peak D. Yep, D in the 5-minute chart. So keep in mind, the Chapman wave methodology is a technique that is viable in all time frames and in all instruments, as long as they can move up and down. So here we go. I wanted to go to here we go. So HA, which is a question I had, Hawaiian Air, I believe that's Hawaiian Air. What does it say there? Hawaiian Air made a peak D in the daily. It's under the 200-period moving average after having gone above. It's in an oscillation that has it like a propeller shaft, sine wave move going from the top to the bottom, and there's your midpoint at about 40. And look at the weekly chart. The weekly chart says, you know, I'm really struggling. I'm not breaking down, but I'm struggling. And the 35.42 area, the 200-period exponential moving average, orange-colored weekly support level, it looks like a magnet that it really wants to come back down there. And the monthly chart says, uh-oh, H pattern could be a failure. So this goes into the category of being a watch out. Now, I wanted to do a couple of things because I was asked about it, and I said I'd get to it. I was asked about if I could just have another look at like the Amazons, the biggies, and the NDX 100. Yeah, look, it has the high that was made on the 5th of April after that sharp pullback from 1617 down to, did I forget to notate that? Down to 1352. I would say that that's a pretty big pullback. Had a rally to try to fill the gap, but couldn't fill that gap that was made late March. And now 1459.56 is a high that has not been taken out today. 1459.76. Oh, it took it out by 20 cents. Good. We've started leg B, but look at the horrible candle. So this is what I'm looking at. Remember the pattern that I talk about all the time? I'm all about patterns. I'm all about waveform. I'm all about repetition of fractals. That is the pattern that's formed that is repeatable over and over. And this lowercase h is really what I'm thinking here. So unless something absolutely fantastic happens next week, I don't think the Qs are going to participate that well. The SMH is maybe a little bit better, but I think we're getting to a lot of resistance now. And the best case I could see is a lowercase hk maybe to an h going to a lowercase m pattern. The monthly chart says, hey, this is still outstanding action, but the weekly chart says maybe it's outstanding action, but short to intermediate term, I think we've got a good few more weeks of consolidation before we can consider 16, 18 an all-time high. And that's the way I'm looking at it. So I did want to do that. Netflix, early in the morning, someone has said we've got the big four rallying. Yep, it's up at 3.44 at 312.69. Netflix. But it was higher, and it's gone to this is a leg D. That is one of the quick Ds, and it says, okay, now be careful. So you've got peak A, peak B, peak C, and you're requisite in a buy mode, peak D, and the MACD just crossed positive, and the stochastic is very weak. It's only at 61%. On balance volume is very strong. So this is going to be very interesting because next week, Netflix had better hold. Weekly chart's still good, monthly chart's still really good, but it better hold 301, the 9-period moving average. Close below that is going to be very negative. I wanted to do this just as we're about to go to the break because there might be some questions that come in that if my engineer's there listening to me with, I don't have my my IMs other than the ones in the den if you need to reach me. So look at this. The VIX index, very sharp pullback. Minus 5% at 17.55, down 94 cents. Going to a trough A, trough B, trough C, and a leg D to the downside. But this is the first time that the weekly chart is going to close below the 9-period moving average in a while. We need to talk about that. I'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're looking at the VIX index. Dow's down 63. S&P is down 437. So what I'm looking at here is that the volatility index is pulling back quite dramatically in relation to where we are in the market. Is it telling us about internal buying, and that that basically fund managers, hedge fund managers said, you know what, I'm done with this VIX index. It's really, it hasn't, with all the news and everything, it hasn't climbed to a leg D in the daily, enough that they know what a leg D is. We went to a peak C1, C2, even a peak C3 with a high of 26.01, could not break above 26.22, the high that was made back at the beginning of March. Is this now basically saying that there's internal buying? If the news is not negative at all, if there's just any signs of good news, I'm going higher. That's all. The market is going higher. I'm saying to you, if you look at what I'm looking at, look at the way the Dow, just let's do this real quickly as we're signing off for the weekend, but take a look. The amount of effort that's gone into this rally with the Dow still stalling at just, it can't break into the 24,650s and hold there. That says to me, you're usurping strength. You're using up a lot of energy and you're having wheel slipping. It's not good. You want traction. You want to put out, I'm always thinking it's like the clarinet. You play, you want the reed to vibrate, you want the amount of pressure that you're giving to give you that exact amount of sound. Not too much, not too little, just the right amount. And here I am blowing away. They've got the MACD good, the stochastic good, and the price is just not giving traction. Will it suddenly get traction? When will you start to hear good news and treat good news as good news because you know that it's going to be followed with maybe more good news? And that's really the issue right here. I think the market's just saying, hey, this is a period, a fractious period that's being reflected in the market. There are always a fractious periods, but it's being reflected in the market. I don't quite know what to do. I think holding a nice cash position, there's nothing wrong with that. Having selective a few individual stocks and ETFs, that's good, both short and long. Don't be afraid. One of our shorts is down sharply from when we got it weeks and weeks and weeks ago. Have a great weekend, everyone. Check out my opening call. Go to the front page of TFNN. Stay tuned for Steve Rhodes, Ted White, Tom O'Brien. Have a wonderful weekend. I'll see you on.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.